Hello, Ezekiel. This is Ryan with TrendLizard.com. I hope you're doing well. Thank you for sending me the email with the 3 tickers that you would like me to analyze. I'm going to get started with the first one on your list, which is VXX, which is a proxy for the VIX short-term futures, an ETN, very similar to an ETF. So let's take a look at it. This goes back to VXX's inception back in 2009. Since then, it has been in a torrential downtrend, and one that is not over. Back in 2009, when you consider all the splits that have taken place, reverse splits in the case of VXX, it's declined from approximately 33,000 all the way down to its current level of $14.10. Obviously, a portion of that is the function of the stock market's very large bull market that's occurred over that time. But another portion of why it has declined so precipitously over this amount of time is contango, and the fact that there is a significant time decay that takes place with VXX. It loses about 4% per month, and obviously that adds up quite a bit, just related to time decay, not related to anything else. So from that point of view, I don't think we can trust the Elliott wave pattern on this ETF as much as we can on other ones that are more reflective of social mood, which is the value of the Elliott wave theory, which forecasting social mood. So I'm not hugely confident in any forecast we can place on VXX. What I can say is that it's an indefinite downtrend. There's no reason to think that any type of larger advance is going to occur. At no point in time ever would you want to own VXX as any kind of long-term holding. Certainly there's opportunities, bounces that can emerge that give you good buying opportunities. One example would be what we saw back in 2011. This proved to be maybe a 300% gain over a very short amount of time. But when you consider that this guy has declined from 33,000 all the way down to 14, and no low is in sight, it's certainly not a buying opportunity, nor will it ever be. So in order for this decline to be, for us to see a sign that this decline has ended, we would need to see a move above 75. Obviously, that's a very large move from here, and one that we are not holding our breath for. We expect VXX to decline perpetually. So if we zoom in a little bit on the decline that's happened off the 2016 low, to me it appears as if this down leg is not over from an Elliott wave perspective. Further, a bounce could emerge, and as long as it stays below 45, the chart would still look bearish. I wouldn't expect any bounce that occurs to move close to 45, but that's just showing you how much room VXX would have to play and still not damage its downtrend. So once again, I expect VXX to continue perpetually lower. I would not own it. I do have some clients who actually short it and hold it as 1% of their portfolio and do fairly well that way. You can also buy puts on VXX, or you can buy XIV, which is an inverse VIX fund, if you are looking to participate in this decline. So it's not one that we think is going to end anytime soon. I hope that's helpful. I will take a look at the other 2 tickers that you sent me momentarily.